Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is Fergus Hodgson at the New Orleans Investment Conference, bringing you the Gold Newsletter Podcast. I'm so pleased to be here and to have somewhat an old acquaintance. I met him a few years ago, Kevin Williamson. He is here as one of the keynote speakers. He's got a new title, Roving Correspondent. So he writes for the National Review, just nationalreview.com, sometimes columnist with the New York Post, and he's got a new book out, The Smallest Minority, which we'll include in the show notes, so goldnewsletter.com/podcast. And his title is Debt and Deficits, the Crisis in Public Finances. And many people here have spoken about this just, I guess, incomprehensible debt the United States has. The one challenge is that people have been speaking about this crisis for so long. When I was an undergraduate, so, a few years ago now, why have none of the brazen predictions of hyperinflation or default or loss of faith in the dollar, why have they not come true?
Well, the United States economy, I think, is too complex to predict its short-term or even medium-term behavior in principle. The best economic modeling we have, the best forecasting we have, the smartest people, predicting it in that sort of specific way is always, I think, a foolish thing to attempt to do, and indeed the history of people trying to make these predictions on either side, not just the people who are worried about debt and hyperinflation, but also people who say, well, if we do X, Y, and Z on the policy front, then we will get A, B, and C outcomes. It's just far, far too complex to treat in that sort of mechanistic way. So you know that the acquisition of debt puts certain kinds of pressures on financial markets, government, on its balance sheet, on the Federal Reserve. The way in which that will play out in the short term or in the medium term or even the long term is very, very difficult for people to predict. And for me, that actually is in many ways more terrifying than the more obvious kind of forecasting scenarios, because the United States economy is so large and so complicated and so tied into the rest of the world's economy that a fiscal crisis of the sort that we've seen in relatively grown-up normal countries like Canada a few decades back will have consequences in our context which are really just impossible to predict. But we've never seen something like that in an economy that accounts for 20 to 25% of the world's economic output.
We often hear this claim that people support a balanced budget amendment. I'm skeptical of that. If there is such a wish, why is it never actually coming to fruition?
Well, I think that people don't actually care about it that much. I think that the fiscal problems, the debt, the unfunded liabilities are seen as a long-term, way down the road problem, and that people's political time horizon is much shorter than that. The other thing is that our disputes, and this is kind of what I'll talk about more this afternoon, our disputes in our politics, particularly when it comes to our presidential politics, are almost exclusively about matters of cultural symbolism, social tribalism, this kind of weird ersatz religion that's grown up around the president. They aren't really policy disputes. We're not having these crying fits in the streets and people who can't speak to their family at Thanksgiving because they're disagreeing about whether the top income tax rate should be 39% or 36.5%. It's a different cultural phenomenon at play. And until you understand that, it's impossible, I think, for people to understand what's actually happening in American politics. That ends up being, for me, a source of real concern, because I worry very much about the stability of the political environment and the ability of the American government in its current political configuration to respond to unforeseen events and crises, whether they're very large crises or relatively minor ones.
One of the challenges we have is that even if we identify the indebtedness of the United States and maybe the pressure on the U.S. dollar, there's really nowhere to run to, right? And you wrote a book, I had you on one of my old shows about, I can't remember the title right now, but you wrote a book basically about why you were still bullish or optimistic about the future of the United States.
Yeah, and I am. That book was called The End is Near and It's Going to Be Awesome. And the thesis of that book was that a lot of things that we think of as being areas dominated by government action will eventually come to be more dominated by private action, whether that's charitable or markets or otherwise, simply as a consequence of the fact that the government eventually will have to retrench its position from many of these places as its fiscal pressures grow more and more demanding. So, for instance, we probably put enough resources already into education. Maybe we put in more than we need to, but the results that we get from that are very poor. If we took the same level of resources and used them to fund more productive models of how to educate people, more productive models of healthcare, more productive models of how to take care of people in retirement, to take care of people who have disabilities and these various other things, then we will end up seeing real improvements and potentially radical improvements in the actual quality of living for people, even though maybe we're actually spending less out of pocket on some of these things simply by redirecting resources out of politically dominated modes of dealing with these problems into more productive ones.
I tend to agree with you that basically it's getting to breaking point in many sectors such as medical care, higher education. There's just the expenses so great. Yeah, so I'm optimistic that there will be basically disruptive innovation. I saw a presentation from a Brookings Institution economist recently, and he was trying to come to a, quote, bipartisan proposal, which included a national sales tax. Do you see a major or heavy tax increase in the future?
Probably. A significant one anyway. If you poll people about these things, the answer you'll get is always the contradictory one. More spending, lower taxes, and a balanced budget. Very likely the most politically palatable and possible avenue going forward, particularly for the major entitlements, is going to be reduction in benefits, some means testing, certainly some slowdown in the rate of growth, and some additional taxes to offset the current expenses. I don't think that there is probably a sustainable political coalition to get behind dealing with these things exclusively through spending cuts or exclusively through tax increases. It's going to end up almost certainly being a combination of those things. And I don't worry about that too much. I worry less about the overall tax rates than I do about the structure of how taxes are collected, how taxes are designed, but also very importantly, which we often overlook, what they actually spend the money on. It matters.
But you put down it's a crisis. Why is it a crisis? Why? I mean, all these people who you say don't necessarily care or don't seem to pay attention, and a lot of this is on partisan lines, unfortunately. You know this, where when a GOP president is in power, Republicans don't want to talk about the deficit and vice versa. And that's a little bit embarrassing to people, to their intellect maybe. But what do you say to the people just across the board that why does this actually matter?
This is one of the areas where I think the, I guess what we should call, for lack of a better term, the Austrian analysis is, to me, persuasive, which is to say that there are people outside of government in the private sector making business decisions right now and personal decisions about their retirement, about building retirement communities, about building healthcare facilities that are based on unrealistic assumptions about what people's standard of living is going to look like related to the major entitlements. And so you've got this very strong incentive for enormous malinvestment on a scale which we don't really know what it is, and we won't really know until it's revealed. So the longer we put off rationalizing this stuff and dealing with it, the more you're going to get capital put into uses that are going to turn out to be poorly matched to what people's actual incomes and resources look like.
Explore, discover, develop. The Gold Newsletter podcast is proudly sponsored by the Discovery Group, an alliance of public companies focused on the advancement of mineral exploration projects with a proven track record of generating exceptional shareholder value through responsible, sustainable, and innovative development. To learn more about our exceptional track record and exciting future, visit DISCOVERYGROUP.CA.
One area which you didn't necessarily touch on there is that if the federal government, and we're not even getting to the states right now, have such access to credit, just this enormous credit line, it can then become much more elaborate, sophisticated, violate civil liberties, do many more things that, again, we just wouldn't want it to do. That, I mean, I lived in Guatemala. It's not a poster child, but there, one thing, and this is why Guatemala is more stable actually relative to her neighbors, is that there's basically a prohibition on getting debt from the central bank. It has to come from private sources. Aren't those expanded powers of particular concern?
Not as much for me, maybe, as they are from what you're saying. We live in an age in which capital is very, very mobile. The capital that's invested in American government securities is there because it wants to be and because it believes our Treasury story better than it believes a lot of other stories about security and stability and all the rest of it. If that stops to be the case, ceases being the case, the ability of the American government to exercise coercion over debt markets, I think, is actually really relatively limited. they can pull all sorts of bookkeeping shenanigans, and they will and have, and we can expect that. But capital is going to go where capital is welcome and where things make the most sense for it. And I don't think that the government, even with all of its power and navy and nuclear weapons and police and everything else they can throw at it, is really going to be able to stop that. We live in an age of mobility not only of capital but of people, and governments actually have to behave themselves ultimately in a way that's competitive and conducive to that. And the ones that do so will thrive and the ones that don't will not.
It's an interesting point that a lot of people, including at this event, yeah, they do see some sort of breakup or some sort of maybe violent event, whereas your story is basically that really we're just seeing basically a less efficient economy, just a long-term but gradual weakening of U.S. productivity.
Sure, yeah. I mean, if you look at right now, our economy is growing 1.9% in the last quarter. So, a reduction in your growth rate of 0.9% would be almost half of what we have right now. So relatively small things like that can end up having large deleterious consequences. I mean, people like these apocalyptic stories. I don't really buy those so much. But, a 20-year recession is bad enough.
Are there any other countries to look to? Japan is one that comes to mind that might be an indication of what is to come for the United States with a demographic, let's say, lethargy or demographic decline, and also just an inability to really revive the economy.
Yeah, I think it's very difficult to compare the United States to any other country just because there's simply nothing that's quite like it. Japan is a big, sophisticated, modern economy with a liberal democratic government and an aging population. It's got all the problems that you alluded to. But the United States is just a very, very different sort of country, and particularly in regard to its cultural and political openness, where Japan doesn't get a lot of, say, in-migration, and Japan is not going to have a chance to revitalize itself simply by bringing in younger people or doing other things that would open it up to other forms of capital and human effort and investment. The United States is a very, very open society that way, open both to people and to capital. That gives it an advantage over countries that are more closed, but it also makes it more unpredictable, and it's very difficult to... I don't like to make predictions in that sense just because I think it's a foolish thing to do.
Obviously, we have investors here, and they're thinking about how can they actually respond, right? So are you suggesting that they should maybe just get out of this supposedly risk-free U.S. or federal debt market? Or, I know maybe you're reluctant to go there because you may be a more political economy specialist, but do you have any actual suggestions for actions people can take?
Well, I think that the idea that investing in the United States or in American government securities is risk-free is foolish. Simply because a market fails to price risk doesn't mean that the risk isn't actually there. I mean, we saw that in the subprime meltdown and the housing crisis. It's entirely possible for markets to misprice risk for a fairly long period of time. I think that my advice to people is always to be modest about your expectations, to understand that there is always the likelihood of disruption of various kinds, but it is very difficult to say in advance when and where and how and what shape that sort of disruption will take. But I think that we're in a period of what Higgs would call regime uncertainty, where you've got Democrats talking very seriously about expropriatory wealth taxes and things like that would really fundamentally alter the nature of property rights in the United States. And then you end up with a very different kind of economy than the one you have now. So it's not just a question of policy, it's a question of more fundamental assumptions about what the role of the state is and what its relation is to property. And that is, to me, a very, very worrisome development.
Well, why don't you plug your new book? Tell it, what's the story?
My latest book touches on some of these things. It's called The Smallest Minority, Independent Thinking in the Age of Mob Politics. And I talk a lot about the ways in which tribalism and this sort of symbolic ersatz religious politics has paralyzed our political discourse and left us unable to deal productively with actual complex problems that need a political solution.
How can aspiring commentators like you, how can they contribute in a more positive fashion? Because we know that media is so often entertainment, and this tribalism, I mean, it pulls at our heartstrings. It gets our attention. That's why it's so popular. That's why it's so people appeal to it. How can we find a better way to go about being commentators and maintaining our integrity?
Well, I think that the desire for popularity is a difficult thing to resist, but from a purely market point of view, it's worth noting that McDonald's is not the only restaurant in America. and the Honda Civic is not the only car. Being the biggest player in the biggest market is a good way to make a lot of money, but there are a lot of returns to be had from being a high-quality player in a smaller niche market. That's what I try to do. I'm very lucky in that I have institutional support from National Review and places like that that allow me to do that in a way where I don't have to worry about more short-term commercial considerations. But the advice I always give to people who want to write is to write. There's really no substitute for it.
So go to nationalreview.com and check out the book, The Smallest Minority. Thanks so much for your time.
Thank you. I enjoyed it.